Hey, what's up, everyone? If you're here, you're probably looking to start investing, but don't have a lot of money to begin with. Well, you're in the right place. Many people think that you need thousands of dollars to start investing, but that's just not true. The real secret, it's all about getting started with what you have and building up your skills over time. Now, I know what you might be thinking. I don't have a ton of cash to play around with. Don't worry, I've got you covered. Today, I'm going to break down 10 actionable steps you can take to start investing with little money. Stick around until the end because I've got a great bonus waiting for you that will give you a huge head start on your investment journey. Let's get into it. 10. Understand the basics of investing. Before you even think about putting your money anywhere, you need to get a solid grasp of the basics. Don't worry, you don't need to become an expert overnight, but understanding key concepts like stocks, bonds, mutual funds, and ETFs, exchange-traded funds, is important. Start by researching online or picking up a beginner's guide to investing. You don't need to go too deep. Just learn the lingo and the differences between different types of investments. The key takeaway here? Know where your money is going and why. That's how you avoid big mistakes early on. 9. Set your goals. When you start investing, setting clear and specific goals is one of the first and most important steps. You need to understand why you're investing. Are you saving for retirement, a down payment on a house, or just to build long-term wealth? Understanding your end goal will guide your investment strategy and help you make decisions that align with your financial objectives. If you're investing for something long-term, like retirement, you'll likely want to look into investments that offer the potential for growth over a long period, like stocks or index funds. These types of investments tend to be more volatile in the short term, but have historically provided strong returns over time. On the other hand, if your goal is a short-term one, such as saving for a car or a vacation in a couple of years, you may want to consider more stable, lower-risk options like bonds or a high-yield savings account, which can preserve your capital while still offering some returns. Setting clear goals also helps you determine the level of risk you're willing to take. If you need your money soon, you'll want to minimize risk. But if you have more time, you can afford to take on a bit more risk for potentially higher rewards. The key is to have a clear vision of what you want to achieve so that your investments can work toward that goal. 8. Start small, but start now. Here's the thing. Many people never start investing because they think they need a lot of money. The truth is, you can start with just $5 or $10. Some platforms even let you invest with as little as $1. The key is to take that first step, even if it's small. Over time, as you get more comfortable and build up your skills, you can increase your investments. For example, let's say you start with $50 and invest in an ETF that tracks the S&P 500. Over time, that $50 can grow as the market rises. It might not be a fortune right away, but the important part is that you're in the game and you're learning as you go. Remember, the most important thing is to get in the game. It's not about how much you start with, it's about starting it all. 7. Use low-cost investment platforms. There are so many platforms out there that let you start investing with little money, and many of them have low or no fees. Apps like Robinhood, Acorns, and Stash let you start investing with small amounts of money. Some even offer fractional shares, meaning you can buy a portion of expensive stocks like Amazon or Tesla instead of having to buy a full share. Low fees are super important, especially when you're starting small, because they won't eat into your profits as much. Find a platform that fits your needs and start small to see how it works for you. 6. Invest in ETFs or index funds. Now, if you're not sure what to invest in, a great option for beginners is ETFs, exchange-traded funds, or index funds. These funds give you a way to invest in a broad collection of companies all at once, which helps you reduce risk. Instead of picking individual stocks, you're spreading your money across a whole market or sector. For example, if you invest in an S&P 500 index fund, you're essentially buying a piece of the 500 largest companies in the US. You don't need to pick winners or losers, and your risk is spread out. Plus, the fees are generally lower than with actively managed funds. 5. Automate your investments. One of the best ways to invest with little money is to automate the process. Many platforms allow you to set up automatic contributions, meaning you don't even have to think about it. Whether it's $5 a week or $50 a month, setting up automatic contributions ensures that you're consistently investing. Plus, you're taking advantage of something called dollar cost averaging, which means you're buying more when prices are low and less when prices are high. Over time, those small, consistent contributions will add up. So make it easy on yourself and set up those automatic transfers. 4. Learn about risk management. All investments come with risk, that's a fact, but the trick is learning how to manage it. As a beginner, you want to focus on investments that have lower risk while still offering some growth potential. That's why index funds and ETFs are so popular. They're generally safer than picking individual stocks, especially when you're just starting out. Also, consider how much risk you're personally comfortable with. If you can't stomach a lot of volatility, then maybe a more conservative investment strategy is for you. On the other hand, if you're okay with some ups and downs, you might want to take on a little more risk for higher returns. Just don't go too crazy early on. 3. Diversify your portfolio. You've probably heard the saying, don't put all your eggs in one basket. Well, that applies here too. Diversification is key to managing risk. Instead of putting all your money into one stock or one type of investment, try to spread it out across different types of assets. You can do this through ETFs, mutual funds, or by investing in different sectors. For example, if you invest in an ETF that tracks the S&P 500, you're already diversifying because that ETF holds a variety of stocks. But you might also want to diversify across different asset classes, like bonds, real estate, or international stocks. 2. Stay consistent even. When it's tough, investing isn't always easy. There will be times when the market goes down, and you might feel like pulling your money out. But trust me, the key to success is sticking with it. Even if your investments lose value in the short term, staying consistent is one of the best ways to ensure long-term success. Think of investing like planting a tree. You water it and nurture it consistently, and over time, it grows. If you stop watering it every time it rains, you'll never see the full benefits. 1. Educate yourself, but don't overthink it. The number one thing that can help you succeed as a beginner investor is education. Read books, watch videos, listen to podcasts, and keep learning. The more you know, the better equipped you'll be to make smart decisions. But don't get caught up in analysis paralysis. You don't need to know everything before you start. It's important to keep learning, but you'll also learn a ton just by jumping in and doing it. Invest a little, learn from it, and improve along the way. All right, folks, that's a wrap. Hopefully, you now have a better idea of where to start your investing journey, even if you don't have a lot of money to begin with. The key is to start small, stay consistent, and keep learning as you go. Remember, investing is a marathon, not a sprint. If you found this video helpful, don't forget to hit that like button, share it with friends, and subscribe for more tips like this. Got any questions or thoughts? Drop them in the comments below. I'd love to hear from you. And before you go, don't forget, there's a bonus waiting for you. Stick around and I'll let you in on a little secret that will give you a head start on your investment journey. Thanks for watching, and I'll see you in the next video.